Hello, testies. Right, so I'm going to knock one out in USO to try to describe some of the chief characteristics of selling a cash secured put. This is the first trade that you want to learn. So selling a cash secured put is a way to take your cash and use it to build an income stream or to accumulate some stocks that you wouldn't mind owning. Okay, so when we sell a put, what that means is we are taking on the obligation to buy 100 shares of that particular stock for each contract that we sell. Okay, so if I go into the options chain for USO, I get various expirations that I can choose. Okay, so I can choose any of these. Typically for our strategy, the optimal area is between 40 and 50 days. So if I tap the March 29 expiration, that's 46 days into the future. So whatever contracts we are buying or selling, they are time bound to expire at this date. So they don't just go on forever and ever. There's a particular date by which they need to either be exercised or they expire worthless. So if I choose that date, I get these different strike prices down the middle. Okay, all these numbers down the middle, 9, 9.5, 10, etc. These are the strike prices that I can choose. And these are the prices at which I'm obliged to buy the shares if I sell a cash secured put. So I could choose to say, okay, well, I'm happy to buy at 10, or I'm happy to buy at 10.5, or I want to get to buy at 9.5. Those are my choices. And for each of those choices, I can sell a put for these prices down this bid column here. Okay, because there's the bid and the ask, we sell at the bid. That is the price at which we can sell. So if I choose to have 10.5, then I can sell at a higher price. If I choose 10, the price is slightly lower. 9.5, slightly lower again. Okay, you get paid more for taking on the obligation to buy the stock at a higher price. But these are your choices. So I could choose to say, okay, I'm happy to buy USO at 10. And for that, I can be paid $0.15 per contract. So that's $0.15 per share, which, because it's 100 shares, equates to $15 per contract. Okay, so that's the obligation I'm taking on. This is what I get paid for. All of these numbers are representative of the behavior of thousands of buyers and sellers of these contracts all over the world electronically making these trades. And all of these traders are either taking on obligations or they're buying rights, and the market just clears it all out and it executes these things in seconds. So I'm going to choose the 10 strike. If I tap the 0.15 to indicate a sell order, I can go through to the order page and make some adjustments. So the C at the top here indicates that this was at the last close of market, because the market isn't open at the moment. So I'm putting in a trade for the market open. So the bid ask was at the bid was at 0.15 up here at the last close, and the ask is at 0.21. So I can put an order in between there somewhere. Because I'm selling, I want a slightly higher price. So I'm just going to nudge the price up here a little bit. I might just take that up to 0.20 per contract. And then that might not execute straight away at the market open, but throughout the day, as the price of USO fluctuates and the options prices fluctuate, that order might come in for me. So then if I tap this button down at the very bottom right here, I can see that I'm going to collect $20 per contract that I sell. Okay, and then just remember, because of the parameters of the contract, as long as the USO stock price stays above 10 up until that expiration of March 29, I just keep all of that money. If it goes below 10, then I have to buy however many hundreds of shares per contract at a strike price of 10. So that's my obligation. Okay. So it's typically somebody else is I'm selling this, somebody else is buying it because they want to insure themselves of a USO stock price not going below 10. So I won't really want to, I'm not that interested in a $20 contract, so I want to increase my quantity up to, let's say, 10 contracts, which is 10 times, I'm obliged then for 10 times 100 shares, means I've got to have the money in the bank to buy 1,000 shares, not the money in the bank, rather the money in my Interactive Brokers account. 1,000 shares of USO at $10 a share. So I've got to have 10,000 US dollars in my account to make this trade. But with that $10,000, I'm collecting 200 US dollars. So if you multiply out that over the year, you can see the sort of return that we're looking to generate. Okay, so I'm happy with those details. It's good till cancel, means it will just stay in the system until I cancel it or it's executed, and I can slide to submit that now. Confirm yes. Okay, so I hope that sort of helps to bring alive some of the details around selling a cash secured put. Bye for now.